Hi, I'm Roger Montgomery from the Montgomery Fund, and welcome to this week's Video Insight. Well, there's a lot of talk about the Commonwealth Bank achieving a significant milestone in terms of its market capitalisation, and yet it's been here before. The market capitalisation of the Commonwealth Bank has been extremely high now for the entire year when you compare it to its international peers. But what's more interesting is comparing it to where it's been before. In fact, if we look at all of the banks just briefly, we note that based on numbers coming out of Scaffold, that all of them are expensive compared to their intrinsic values. For example, Westpac is trading at a 20% premium to its intrinsic value, the ANZ 12%, the National Australia Bank 14%, and the Commonwealth Bank a hefty 26% above its estimated intrinsic value. Now, in the long run, it's quite simple. Intrinsic value determines price. The price today is significantly higher than intrinsic value because interest rates are low. So beware if interest rates start to go up. But the Commonwealth Bank has been here before. It's been at significant premiums to intrinsic value in the last 10 years 4 times. And in fact, the last time was April 2010 when it traded at a 28% premium to its estimate of intrinsic value. Do you want to know what happened next? The shares fell 20%. Prior to that, it was November 2007, the end of the boom before the GFC. And the shares for Commonwealth Bank were trading at a 24% premium to their estimated intrinsic value. They subsequently fell 39% before the GFC really hit and took them lower. Prior to that, we have to only go back to May 2006 when the shares were trading at a 31% premium to Scaffold's estimate of intrinsic value. What happened next? The shares fell 15%. So with the shares trading today at 26% and having only ever been at a greater premium to intrinsic value twice in the last decade, one might argue that the shares are not only expensive, but vulnerable to a sell-off. Now, I don't know what that catalyst is going to be, and let me say this. If there is no catalyst and conditions remain as they are today, there may be no sell-off at all. But it strikes me that the premium being paid for by new buyers of Commonwealth Bank isn't justified by the economic returns. I look forward to seeing you again next week, and in the meantime, please follow us on Facebook and Twitter.